Hey hamsters! The world of crypto is exciting, but unfortunately it comes with some risk and a little bit of learning curve when it comes to managing wallets, online exchanges, etc. For this reason, the Crypto Exchange Traded Fund ETF was born. Think of it like a hamster-sized hamster ball. Instead of navigating the wild open world of crypto alone, the ETF rolls you around safely while still letting you explore the same terrain. It might feel safer, but remember, even in a ball, you can still hit a few bumps along the way. That risk is never totally gone. So, before going all in on this safer investment vehicle, it's important to know what you are getting into. This week's Academy will dig into what an ETFs, how they work, and what some of the options look like in 4 major countries around the world. To start, let's nibble on the big question. How does an ETF work in general? Think of it like a hamster stash. Most ETFs mirror an index by gathering a basket of goodies like crypto treats. And there are a couple of ways to track the value of these treats. One strategy is building a stash that mimics the value of the digital goodies inside, so as the assets grow or shrink, the ETF's value follows along. Other crypto ETFs, they are more like hamster planning for the future. They stock up on future contracts, agreements to buy or sell crypto treats at a specific time and price down the line. So they're always one paw ahead.
I am always 2 steps ahead.
Keeping this in mind, different countries have a slightly different approach to ETFs. Let's compare. The United States. While there are many options for crypto ETFs in the United States today, it wasn't always that way. Consider the journey. Back in 2022, crypto companies like Fidelity, Skybridge, the Grayscale knocked on the SEC door trying to launch spot Bitcoin ETFs, but each time the response was the same. Denied!
Denied! Sit down!
And it wasn't just ETFs in trouble. Big names like 3 Arrows Capital, Celsius, and FTX crashed and burned, sending shockwaves through the hamster tunnels. In May 2023, Cathie Wood's ARK Investments took another brave leap, filing for a spot Bitcoin ETF. Then, in June, BlackRock, an alpha hamster of Wall Street, jumped in too, making all the other hamsters perk up their ears. Soon, everyone from Fidelity to Invesco was filing new applications, making it look like the SEC might finally crack. And then came the breakthrough of 2023. With a big court win for Grayscale, a judge declared that the SEC hadn't justified why it kept blocking these spot ETFs. This was the game changer, as the SEC had to go back and re-evaluate their stance. Finally, in January 2024, the SEC gave the green light to 11 spot Bitcoin ETFs, making them available in the United States. Keep in mind that these now approved spot Bitcoin ETFs do not pay dividends or generate income.
What?
Their investment value is solely dependent on the appreciation or depreciation of Bitcoin price. Again, the advantage here is that you don't need to navigate an online exchange and you don't need a crypto wallet. Instead, investors use a brokerage account to buy and sell ETF shares through market or limit orders, similar to trading a stock. This means hamsters familiar with traditional investments would have an idea of what to expect. Keep in mind, now there is also a long list of crypto ETFs that exist in the United States, which has grown to include options with exposure to Ethereum, such as the Bitwise Ethereum Strategy ETF, the ProShares Bitcoin and Ethereum Market Cap Weight ETF, the Bitcoin and Ethereum Equal Weight Strategy ETF, and the ETHD ProShares Ultra Short Ether ETF, and few more options to wait. Canada. In February of 2021, Canada became the first North American country to offer crypto ETFs, both spot Bitcoin ETFs, aka ETFs that hold Bitcoin, and those that hold Bitcoin futures contracts. In Canada, regulators have approved both and made them eligible for tax-advantaged accounts.
Whoever you are, thank you.
Here comes the how-to. These crypto ETFs can be purchased through a regular brokerage account. To start, you can select a Canadian brokerage that offers trading in ETFs. These should be most brokers who offer ETFs at all. Then you would open and fund the account with details including your name, contact info, and financial status. After, you can deposit the funds through a linked bank account. After you've done your research and selected the ETFs that make sense for your investment goals, you can place a trade order, which you can do by searching for the ticker symbol. Germany. Next on the list, we'll zoom out to the continent of Europe, where a growing number of countries are now offering crypto ETFs. In February of this year, Europe held 8.8% of the global market share for spot Bitcoin ETFs, with 13 ETFs incorporated in Jersey, Guernsey, Germany, Switzerland, and Liechtenstein. You might remember news of the first ever spot Bitcoin ETF, which was announced in August 2023. The Jacoby FT Wilshire Bitcoin ETF listed on the Euronext Amsterdam exchange. However, while reports show Europe is flourishing in this space, it is worth noting that its investment vehicles look a little different.
Huh?
While the US hamsters stick to their usual ETF tunnels, European hamsters prefer to explore exchange trade, commodity ETC, and exchange traded note ETN pathways instead. The end goal is the same, getting the tasty crypto treat, but the routes are just a little different in this case because of the legal framework defined by UCITS guidelines. To highlight one European country in particular, let's take a slightly deeper dive into Germany. Germany's ETC Group Physical Bitcoin was the earliest spot Bitcoin ETF product to start trading on Germany's Extra exchange, and allows European hamsters to scurry into the game with a regulated, directly backed Bitcoin ETF. Reports earlier this year ranked the ETF as being number 5, although more impressively the only non-Canadian or American offering in the top 5. Brazil. Despite the primary markets for spot Bitcoin ETFs being deemed the US, Europe, and Canada, there is a smaller market that has since emerged in Brazil. And the interesting thing about this South American country is that the Securities and Exchange Commission of Brazil, aka the CVM, approved the world's first spot Solana ETF on August 7th of this year.
Oh my god!
Yeah, you heard it right. Some of our fur-tastic friends have ventured beyond the big cryptos, launching ETFs for newer tokens like Solana. These unique baskets allow hamsters to invest in different burrows of the crypto ecosystem without needing to build separate nests for each token. This, of course, was significant both for Brazil, but also the entire crypto industry. And if that wasn't enough, Brazil then went on to approve the second Solana-based ETF via Hashdex, which is a Brazil-based asset manager with $963 million in assets under management.
But that's simply not possible. Why isn't it possible?
Headlines were also made in August when BlackRock listed its iShares Ethereum Trust ETHA on Brazil's B3 exchange. However, even prior to this, a CoinGecko report shared that Brazil had the 4th highest spot Bitcoin ETF market after the United States, Europe, and Canada. Impressive! Impressive! And that concludes our ETF trip around the world. Remember, hamsters, no matter which country you're in, ETFs can be a powerful tool for exploring the world of crypto without running through the wild maze of exchanges and wallets. But as we've learned, every region has its own rules, risks, and rewards. Thanks for joining today's Academy. Subscribe and remember, hamsters have power. One for all and all for one. Bye!